Hi, I'm Vern again with TaxCore, and today you're here to talk about unpaid employment taxes. So you've got a corporation that you own, or that you're an officer of, or you're an employee of, and you have some unpaid employment taxes. Now, unemployment taxes are those funds that are withheld from your employees' paychecks every pay period. You're required to turn those over to the IRS every quarter, every month, every 2 weeks, or every third day, depending on the frequency of your federal tax deposits and the amount of your tax deposits. So you've gotten into a situation with your company that these taxes have been unpaid for a certain amount of time. And the IRS has now assigned a revenue officer, an actual person, to come to your business and conduct an investigation to determine who was responsible for not paying the taxes and if that person was actually willful in not paying those taxes. These are called trust fund taxes. And that is the one area that the IRS does not play with. They are determined to collect those unpaid taxes. So, out of every fictitious $1 of wage that you pay an employee, almost 15 cents of it goes to paying Social Security and Medicare tax. That 15 cents or so is what's called trust fund tax. That is money that's held for trust for the employee and paid over to the IRS. Now, as an employer, you're required to match those Social Security and Medicare taxes. So we're talking about just a portion that came from your employee's $1 of wage, the fictitious $1. So once those taxes start to accrue, let's just say for a period of a year, you don't pay those taxes. And now that trust fund tax represents approximately $100,000 in tax, or 50, or 20, or $250,000. It doesn't matter. That trust fund tax, a revenue officer is going to provide you a document, and it's going to break down every quarter of the trust fund tax. And they're going to say to you, you need to pay it, or you need to set up a payment plan to pay it off. But when you owe a certain amount of tax, and there's a magical dollar amount that the IRS has when they conduct a trust fund investigation, they need to know who was responsible for paying the tax, who was the payroll clerk, who was the boss who was signing the payroll checks, who was responsible for making federal tax deposits. Once they determine who the person that was responsible, now they need to figure out, did you willfully decide not to pay these taxes and paid something else? If they determine that you were willful and responsible, that $100,000 of tax that we're talking about, this fictitious $100,000, and in your situation, it could be any other amount. This was a corporate debt. Remember, as a corporation, it is a fictional entity that is set up aside from the corporate officers. That corporation has a debt of 100 or almost 200 something thousand dollars for total tax, but the trust fund tax represents usually about half of that amount. So that $100,000 of tax can now become your personal tax debt. The IRS can take that $100,000 from the corporation and now put it onto your personal Social Security number and start collecting it. They will file a notice of federal tax lien against you personally. They will come after your assets, your bank accounts personally. They'll go after your wages personally. They can seize your home or your automobile as personal assets. This is a very, very dangerous place for a corporation to be and its corporate officers. So if an IRS officer comes to your home or your business and wants to conduct a trust fund investigation, it's my advice that you completely stop the process and get someone to represent you, because you don't want to go into this interview without knowing all of your rights and understanding how the IRS is going to conduct this investigation. You're going to want to give someone a call, especially TaxCore. This was something that I did for many years at the IRS, and I understand exactly how they're going to go about coming after you to get these taxes paid. Sometimes there's ways that these things can be fixed. There are ways that we can forestall the trust fund being assessed against you personally and let it reside with the company, let them pay it off. The IRS is going to conduct the investigation whether you want to put into a payment plan or not. Now, the only way to stop the trust fund investigation in its tracks is by paying that tax liability off or paying a significant portion of it. You need someone with our expertise here at TaxCore to resolve this for you. Do not handle this alone. Give us a call. We can help you out.